Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We'll try and get this done 10-15 minutes. Of course, I say that every video. Who knows whether I actually hit that number. But here we go. It is Monday, 14th of October. Happy Thanksgiving if you're here in Canada. This is a holiday officially for us. Did also notice a few international markets are also closed. Japan was closed yesterday. Today, I guess their yesterday was, anyway, overnight, Japan was closed. I think it's Columbus Day in the United States. It's a banking holiday. So you can definitely see it in the market. Things are very quiet here this morning. Always a good idea to check in with risk on, risk off. Quite a bit of our conversation will be around that. And you can see that not a heck of a lot of movement in the markets here today. And I would just simply attribute that to the holiday type of environment we're in right now. We had on the daily brief today, and people on the site have asked me and suggested to me that I ought to remind people that if you are getting value out of these daily brief recaps, keep in mind we do an hour-long show every day, Monday to Friday. And a lot of the stuff that I talk about here, we talk in detail through that show. So if you are interested, feel free to consider joining TRI. And being a part of that daily brief frivolity. Today we had a report from our CTO here at TRI, Sjord, coming from the capital of the Netherlands, Breda, center of the universe. And we had lots of fun reviewing Rocket Chat because Rocket Chat blew up for us last week and we had to spend the weekend fixing it. And but also too, Sjord showed us a bunch of new features that we can use on Rocket Chat for interacting with each other and searching and stuff. So it was really cool stuff there. Thank you, Sjord. Totally appreciate that report. As well, on a sort of semi-monthly basis, we have our fundamental analyst check-in, Jamie, who gave us a fantastic overview report of the current world's macro top-down fundamental analysis. Sort of where are we in the economic cycle and some key data points to keep an eye on. And he also gave us a stock idea out of his report that he was thinking maybe prices could come down a little bit if the consumer starts feeling problematic here. So we'll talk a little bit more about that later, but Jamie did just a fantastic fundamental analysis report here today. As always for these daily brief recaps, I just like to put together a quick little sort of overview chart deck. It's supposed to just be like a quick overview of the market, nothing really too specific, but just give you sort of an idea of what we're thinking. What I found interesting was in a lot of the talking heads, a lot of the media, now they're starting to get really interested in the fact that the US dollar is really, really strong here. And how ironic that the public is actually starting to talk about a strong US dollar. We've been talking about the implications of strong US dollar for a while. And lo and behold, here comes a big fat daily M on the charts. So public is thinking up, and ironically enough, the market has actually already started to back off here. As we say repeatedly on these videos, what we really want to watch is the weekly charts to see if a fractal comes in up top here. I think you could make the argument that a bunch of uncertainty in the market, one of the reasons why US dollar index was getting bid up as much as it was people were really uncertain and fearful over this China-US trade deal conversation, or lack thereof. And one might argue that this potential fractal was painted here in the market, the M off the daily charts, on the anticipation that the Chinese and the Americans were going to strike a deal, put that whole trade talk to bed, and start moving on. And lo and behold, I'm not going to get into the minutia of it, but long and short of it here is there's sort of like a tentative start towards settling trade deals. I don't know whether anything's actually been solidified. And as a result, we're painting a very quiet inside bar here on the US dollar index first thing in the morning right out of the gate. And you can also see that too. Keep in mind, it is a holiday session, so to a certain degree, a lot of this data is a bit suspect just because the volumes are extremely light. But, we talked about this just a moment ago. Risk on, risk off. Where are we with all the uncertainty around those trade talks? The risk off, people anticipating a big deal would be struck and, capitalism is back in the fore or whatever. The risk off assets all got punished there late last week into that trade talk event. And they're all catching a bit of a relief rally here first thing this morning. But as you can see, the reactions are extremely muted. So we'll see how this develops. I think I've talked to you recently. I did really like the idea, especially if trade talks are finally going to get solidified. I did actually like the idea of getting short off of these reload zones. The only one that really presented an acceptable trade for me was the bonds. Bonds got absolutely destroyed there through last week. And interestingly enough, it wouldn't surprise me now that maybe bond market weakness, i.e. interest rates going up, might actually be sort of the catalyst that marks the stock market's pivot. And we haven't really talked too much about rising interest rates. It's been all about low interest rates. So let's watch how these bonds act. My hunch is all these gaps, we're probably going to get some sort of relief rally here into the end of October. And keep in mind that my cyclical study on the stock market suggested that we probably should bottom out somewhere near the end of October. And now this is starting to look a little bit clearer. We've got both the ECB and the Fed meeting right around this window. And of course, the Queen now has suggested that it's in England's best interest to get the hell out of Europe. I think those were the words that she used. Not. But anyway, the point being that that's going to be a massive uncertainty. And of course, we talked lots about that with Jamie this morning. And I wouldn't be surprised if there's a whole bunch of, oh my God, what's going to happen on that Brexit event right around the end of October. So I did find it interesting that, looking at the stock market, risk on, risk off, sort of the anticipation of trade deals, you can see how the market worked its way up into AB equals CD targets. 78.6s couldn't recapture this candle. So I have a funny feeling this is where the institutions are defending their shorts. There is this cheeky little gap right up top here. It doesn't look to me like the market's got enough inertia to punch up through there. But we'll see what happens. Only time will tell. And interesting too, on sort of the anticipation of the trade deal, market gaps higher, then it promptly puts in a reversal, and then we broke below those lows. So in essence, that's like a tweezer's top there, and the failure through these lows actually opened up the window for the stock market to start working its way back down again. We'll see what happens. Like I said, only time will tell. Still do have a couple of my put options. Only really bought half of the position. I could make the argument I should have bought the other half up here, but I'll just leave it. I'm fine with what I've got on the books, and I'm looking for this dump into the end of the month on the risk on assets. Continuing our conversation here, the exact flip side, risk off. They've gotten their asses handed to them over the past week. Gold's actually hung in here pretty well, I have to admit. The bonds got thumped, the yen got thumped. There is this M working on the gold right here just in the short term. So let's see what happens after the holiday break. And whether this, coming back to trading in earnest tomorrow, let's see whether this gold market has got the gumption to get back up above here and confirm bigger W's, or whether we keep working these M's lower. Gold's in a really interesting spot right here. And I have to say, it's hung in a lot better than what I was expecting. Things like the bonds came off hard there last week. Really don't have any reason to be overtly bullish. If anything, what I'd like to see to sort of stop the bear is a nice break above these levels and then a W on the other side of this trend line. So we'll watch. And right now, as I said, my bias is still to the downside with these markets. All right, moving on. This was just to finish off with our talk about stock markets. This is an idea that Jamie sort of threw at us. Weight Watchers, consumer discretionary. And everybody should look at this and go, okay, well, I can see where trendline support here is, the original market structure. I can see that they're sort of just walking the market higher. Holy jeez, they left a big old hole on the charts. There's also another one here. And lo and behold, things are starting to look a little toppy here. So, I wouldn't have a problem if somebody just simply said, look, I'm going to hunt and I even suggested in the call today that I don't have a problem hunting put option strategies. If I can buy 6 months of time with my strike price somewhere down in this area, anticipating this gap getting filled, that's actually looking like a half decent trading idea. We've got the makings for a top, gap fill up top here. That was one hell of a trade location. I'm not really pounding the table either one way or the other. I think it's just a good graphic illustration that some of these markets have come awfully far, awfully fast, and they've left some pretty big holes on the charts. And if we did have to have a downswing in things like consumer discretionary names, I can completely understand. It makes sense to me. So, interesting anecdote from the stock market there for you to consider. Heading on over to crypto, some really interesting developments here. I'm watching my little day trading model really closely, just sort of vetting it out for the community. This was my weekend. You can see lots and lots of activity. Pretty much a zero-sum game on this. And, I even challenged all the site people. How do you go about vetting setups? What is sort of the process? Really, you got to create sort of a spreadsheet to track everything, track all your performance, take commissions into consideration, size of trade issues. I think it's a good idea to, not only articulate your levels, entry, take profits and stops, even grab a chart of what that trade looks like to start out with. And then when you did exit the trade, what did the chart look like on the other side? And you can see, this was a challenging weekend. We had some winners and we had like a cluster of losers. Just going through this setup, and I still have to fill in the database. I'm still missing a chunk of trades here, but when I first started the study, going through, these aren't bad numbers. The issue here, and somebody sort of brought it up recently, is holy shit, commissions are really eating into your net profit and losses. But on balance, I like these numbers. Like I said, I still have a bunch of data points to fill in here. So as we go through the videos, I'll sort of update you. But this is what sort of vetting a setup looks like. And it's a pain in the butt. There's no doubt about it. And it takes a lot of work. But in essence, this is that spreadsheet of what does this look like. This is the actual chart itself. So, with regard to Bitcoin right now, and, somebody criticized me for making this comment before, but, when I look at this, especially through sort of holiday sessions here, we kind of talked about this heading into the weekend, that because it was a holiday weekend, we were probably going to see some really wonky price action, and I think that's exactly what we got here. Was we got just wonky price action. Market tried to work its way up. It actually hit bullish objectives here through the weekend, then dumped precipitously on the fail of any sort of follow-through move, and then promptly put in another bottom here, even with a little head fake move lower here, and then jump back up as through our daily brief. And the irony of it all is, from sort of beginning to end, this has been just a big hurry up and do nothing. So frankly speaking, through the big hurry up and do nothing, I'm actually exceedingly pleased that through the big hurry up and do nothing, tracking all of the data points and making sure that you keep accurate records, we actually, through all of this, believe it or not, we were actually able to eke out a very small gain through this past weekend, even though it's been basically a nothing weekend. Still thinking, like, on the 4-hour basis, A, B, C, D. We have to go and break this top here, and you can see I had to move back into bear hunting mode right after I actually got a signal saying, okay, well, you can go back on pause 4 hours, turned up, and then promptly on that poop in the bed, they turned back down. So as it stands right now, I'm still hunting short setups, and if there's a fractals or anything that develop here, I'll probably be logging another short idea. And my hunch is, until this high is actually taken out, I think we have a date here down at about 78 and change here on these perpetual swaps. And really all that does is it just takes us back down into these candle body lows. And you've heard Brian talk lots about how he loves candle body lows for trade location. So that's sort of what I'm thinking Bitcoin-wise. Now, the interesting thing about this is if we actually look at things like dominance, dominance actually, I think, made a new low here this morning. So there are parts of the crypto market that are actually doing okay. You know, we had one site member who was talking quite a bit about this one particular name recently. Hats off to anybody who took this trade. Totally sick. But this is the Cripple versus Bitcoin. So what is it? What are the names? Who are the names that are actually launching this market higher? And you can see Cripple here moved to new highs relative to Bitcoin this morning. And what I wanted to point out to everybody on you know, Twitter and YouTube and all that kind of stuff who watch this later on is, you know, learn this stuff. Because, I mean, damn, it works so well. I didn't take this trade, but, you know, hopefully everybody looks and sees, okay, I want to find a W. Give me a W. Give me a W. Hello, W. There's a W. And then this is where it's really cool. And, you know, the Duke here who produces this show with me, we actually coined this setup off of him, although I don't know whether he likes it or not. But if you can find previous market structure that lines up with 78.6s, these are sometimes just the sickest trade location. And look at that trade right there. Oh my God. Learn this, people. Seriously, learn this. Please, please, please learn this. I mean, this is basically a trader's trade right there. And, you know, very simply put, if you can just get into the habit of saying, look I'm going to buy original market structure. And if you want to put the bid at 78.6, I don't really care. But, what the hell's this? That was weird. Okay, I'm not quite sure what happened there. Let's try that again. If you can throw your bid in, right, at reload zones of original market structure, you want to throw in a nice little trend line. I mean, there's 3 reasons for a trade right there. And you know, what I wanted to show you was, you know, something, and I don't know whether it's going to work or not. I'm not quite sure why it's doing that. How frustrating. Oh, look at these nutso numbers. You're going to let me do this? Damn it. What a piss off. Anyway, can't show it to you here. But if you can buy against here and just risk against these lows, you know, really, I mean, this is exactly everything that I try to teach in the sort of level 1 program about pretty damn sexy trade setups, right? So there's going to be your risk window. You're just going to say, look I'm going to buy the original bottom. I can't chase the market. I'm not allowed to. I have to hunt reload zones. I'm going to buy the original bottom, and I'm just going to simply risk to new lows. And then it's just really a function of risk reward, right? So I can't show you the trade metric tool. Stupid thing won't show me. But in essence, 2 to 1s looks something along those lines. 254, so that's like 500 and change. So 2 to 1s, boom, get filled. Maybe sell half of your position at that 2 to 1 objective. Move your stop to scratch on the remaining, and now you're just laughing. So really, really good example. And if I understand correctly, these guys have a fundamental event coming up. Somebody on the site was telling us about this swell event, and the Duke was reminding me of this. So you also have a fundamental catalyst to actually frame your behavior and expectations. So fundamental driver, technical W, reload zone, Beautiful bid right off the original double bottom. Sell half of the position at 2-1. Stop to scratch on remaining. Trail stops as we work our way up. And this might just buy you a Lambo. All right, I think we'll leave the daily brief summary at that. So I hope you enjoyed the presentation. Happy Thanksgiving to all the Canadians out there. And happy Columbus Day to our Americans. All the best, everybody, and bye for now.